Welcome to the Turnaround Podcast with your host, Stephen Phillips. In each episode, Stephen speaks to experienced practitioners who discuss their careers, key moments, challenges, and lessons learned in financial turnarounds and business restructuring. Join us as we unravel the secrets to turning struggling businesses into success stories. You can find this show on all the major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, Spotify, and on our website, frylibertas.com. Now, here's the host of the Turnaround Podcast, Stephen Phillips.
I'm excited to welcome renowned short seller Fraser Perring of Viceroy Research to the Turnaround Podcast. Viceroy is an investigative financial research group dedicated to uncovering financial misconduct, promoting transparency, and holding public companies accountable. Their work has played a crucial role in improving the quality of global financial markets. Fraser has been at the forefront of exposing several high-profile corporate frauds, including exposing the famous Wirecard scandal. In this episode, we'll dive into some of his most celebrated cases and gain insight into the world of investigative financial research. Fraser Perring, welcome to the Turnaround Podcast.
Thank you for having me, Stephen.
Well, I'm absolutely thrilled to have you because we've been speaking for many years, and I have found your work and the world that you inhabit absolutely fascinating. So I think the viewers are going to be thrilled to find out a little bit more. But maybe to start off, Fraser, can you just share your background and what led you to start Viceroy Research?
Well, originally I was a social worker, so you might say it doesn't suit you for or qualify you for financial investigations, but I'd say
maybe it does.
Yeah, I'd agree with you there. It teaches you a finesse at looking at the bigger picture. There isn't always one narrative. And in terms of the research side of it, which I pride myself on, it makes you dig and test your own theory, so you're a bit more objective. But I left social work, I think it's well publicized, in 2012, I think it was, after I blew the whistle on a major child risk issue, that it rustled the feathers of who I complained to. And so a witch hunt pursued, in which they tried to discredit me, got me struck off, and finally resulted in me taking litigation against them. And I can freely speak about the litigation in terms of they had to pay me what was a handsome figure, still is, which enabled me to change career after how they'd treated me was considered disgusting. So long may it continue that people are willing to speak out. And it speaks volumes about how when you're publishing, particularly in this world, in short selling, you are going to get significant pushback, both legally and personally, in terms of threats. Post social work, through a chance meeting with someone, I fell into short selling, which is really just social work for the financial market. They all have a history, they all have a past, and that includes the financial past. I haven't got one financial qualification to speak of, save for your GCSE and A levels. But the rest is self-learned and much common sense. So, I came to it very elongated, but I enjoy it.
Yeah, it does sound so. So Can you explain a little bit about the structure of Viceroy? I mean, you a hedge fund? Are you a research house? What is your structure?
I think by definition we are a research provider, but that's slowly shifting into a hedge fund status, which people will see over the coming months as we finesse how we do things, and finalize a few of the outstanding things so that we're up to scratch, because we're going to have to be as accountable as we expect others to be. So it's taken longer than planned. That ball started rolling 9 months ago, and we're in the final phases of it now. But there's 3 of us in total. There's Aiden and there's Gabriel, and we sort of have unique roles where our skills, we leverage off our skills set. Mine specifically is down to research and finding specific details. Aiden and Gabe is more the analytical and financial element. We play to our strengths. And it's worked well for, I think, nearly 10 years. I think in June it'll be our 10th year. So we aren't doing too bad to be about. We've met some serious adversity along the way.
Yeah, I think we'll get into that. I mean, I think one thing I've noticed is that quite a few short sellers or activists have given up. We've been on a sort of long bull market run, and it's probably, suffice to say, quite difficult for short sellers over the last few years. So just the fact that you're still around is probably testimony that you've done something right. But let's move into the meat of the question. What our discussion is about is, how do you identify the targets? What are your targets? What are the red flags? What's your methodology?
Generally word of mouth, because the corporate image would be one of conspiracy, where you're just fed information that you publish. Whereas the reality is, on a daily basis, you'll speak to many people about many different suspicious companies, if you want to call it that, where there's decent concerns, but do they warrant those concerns? So word of mouth, or it might be a newspaper article for Adler in Germany. There was a specific journalist that had done Melanie. I don't know. I can't remember who she works for now. She had published quite extensively on it, and we got digging and we found so much more. There were more questions left for us of her articles than there were answered. And then when you start diving into subsidiaries, the actual assets themselves, who bought them, who sold them, and who's controlling the company, it started to stink. And that's often the case with Recon Africa in Canada. We noticed literally through someone's grandmother, who had noticed that an oil company was advertising on her Facebook page, where she keeps in contact with all her family. And it turned out to be them. And she asked her son, should she invest in this Recon Africa? It's endorsed by Facebook. Little did she realize there was no endorsement. It was an advert. And a few scratches and you think you're on to something. And generally we enjoy harder projects such as Arbor. That's been a tough cookie, and we know we're right there. But the reality is, will the market believe you, or when will they believe you? Because you can't be short infinitely. But we delve down all the way down to the past of the directors, their commercial past. So in terms of what they've run before, have they left a stream of bankruptcies? Is it very much the same modus operandi as their past? And often you find common threads. One of those is they're always immune to downturns, and they like to dismiss very relevant concerns with, I think, a disregard for how it looks, never mind whether they're being honest. And we give some examples. So with Adler, everything was fine. Their values were fine. Their leverage was fine, as in loan to value ratios. Whereas just scratching the surface, it became clear that that was a pack of lies. Recon Africa allegedly, I think at one point, had more oil than Saudi Arabia ever had, and they'd stated they'd found oil and there was a lot of stock promote. If it's too good to be true, generally it's at least worth looking at a short, but definitely avoid from the long side. So you get to a stage where I think in reality, once you find all these issues, the same in Wirecard, where even before they blew up, while COVID is impacting a lot of their competitors with flight sale revenues dropping drastically, Wirecard was the only one immune.
Yes.
And the reality is they all have similar archetypes, which is overpromise, jam tomorrow. And when they're questioned on that, they look further ahead, and they will avoid any problems, or avoid discussing problems that the reality is there. One, for example, in Arbor, who have only taken 90 million of impairments on a loan book, which at the time was circa 14 billion. But everyone else with similar sized loan books proportionately had taken 1.5 billion, 2 billion. And it doesn't make sense. If it doesn't add up, you're either gambling or you don't understand the business. And
got it. So let's move on a little bit to the trade side. So you've identified something. You've seen the red flags. Do you put your research out first? Do you put on a trade? What trades do you put on? Do you work with other people in these trades? Or, so what's the methodology? Without giving too much away.
Historically, it used to be, because what we're working on is public data. Yeah. And historically, there's no insight. I don't like the sound of prison, never mind want to go to it. So, it's extensively checked. But historically, we have always taken positions in companies ahead of our research. Some we publish and some we don't. There's we're currently short 3 stocks we feel the market is waking up to, where we haven't published any research as of yet. We may do. Other companies, we think it's in the public interest, they should know about the anomalies. And you could argue that, well, that's because you're driven by profit. But unusually, we take quite long-term views on our positions, in terms of we aren't there to cover on the day of publication. And you can see that via public data just on Home REIT, where I was short for an extended period of time above the threshold. So there's a lot of criticism about some short sellers, and it's their choice. But in our view, if we're calling something dubious, overvalued, how can we be covering at the same time as we are telling people how bad or how much transparency needs to be committed to by a company to rectify this matter. Because sometimes it's a case that they're clearly being disingenuous, and you can see why, because they want to support their stock price or their stock compensation scheme. And but the reality is, for example, on Arbor, through various positions, I think we've been short over a year now. We've also
Sorry, carry on. I interrupted you.
And it's I think positively, I think it's essential that we do raise concerns about companies where we believe it's justified. That's getting a lot harder with there seems to be an extreme push. Some things I can't go into because they're still going on, or they're part of a legal process at the moment. But there's an extreme push to try and silence critics, which raises a question around the legal fraternity of what they're doing, because we've had various suits, including Wirecard, with threatening of litigation, where it's completely unfounded and it's to create fear. And I think from a legal perspective, I think we've had more action in that area than we desired, but we prevail. But the job, as you rightly said at the beginning, has become a lot harder. Some people, friends, and also people I just know of, have exited the business because it's become, I would say last year, specifically for me, I definitely thought about leaving the industry and moving on. And that wasn't because of financial returns. That was just the massive impact everything was having just on living life, where it overwhelmed everything. And luckily, through the support of a good legal team and friends, you get there and you have to rebalance. But it's very difficult because it's almost all or nothing.
Yes, I want to talk to you about the some of the issues you face with regulators in particular. But I just, could you explain to the audience what actually is a short, trade? What do you physically do? Who do you call? Is there a sort of investment bank that you sort of deal with regularly? What are the physical, how's it really work is what I'm asking.
I'll try and stay on track. That question's loaded with many issues that need raising. But in terms of short selling, you borrow stock that you sell into the market, and you, inverted commas, hope to buy it back at a lower price. And that can be whether it's bonds, but you can also take positions, and particularly in high dividend stocks where they're trying to protect the stock price by the issuance of a dividend, we maybe look at options so that we don't have to suffer the same pain as where they issue the dividend, where you have to meet that. So it's a simple mechanism. It's been about for years. I think it's essential within the market to keep a healthy market. Without us, you would only hear the bull side of it, and companies even have an anchor to some of the truth, if you want to call it that, or all of it. And it's the downside to short selling is you can lose a lot more than your initial investment. You've heard of the mother of all squeezes with GME and AMC and Roaring Kitty. But you try and avoid. Well, we tend to avoid a certain level of short interest, at least at the initial stages, because you have to manage risk, and you carry a lot more risk as a short seller than you do long only, where you can, save for a few instances, you can only lose your original investment. And you can be a lot more relaxed. I wouldn't recommend anyone goes into it lightheartedly, because you have some very stressful days. But in reality,
I'm sure.
I enjoy it. I'm naturally predisposed to be more skeptical.
Yes. Yeah. So do you have leverage on using your short? Do you have a facility where you sort of have an instrument or an amount of money or an amount of exposure that you have with your investment bank, saying, this is the trade I'm going to put on, or is it just your own money that you're using?
Oh no, it's through the IB. We do, by nature, just being short, you're on leverage, you could argue, even if you've got significant cash reserve. The reality is that it's more of a risk management exercise in terms of what you feel is an acceptable loss, which should be with any investment, versus where you think the real price should be with that company. And we don't always get it right. I wish we did, but we've learned along the way. Some of them we've suffered extreme pain where it's nearly doubled against us. One, for example, being Athenex, where the stock went from 11 to 22, I think it was, and that was extremely painful. But we added all the way up because we had conviction. I don't even know if it's listed now, if I'm honest. I don't follow it, but it was trading at cents, 50 cents at last time.
So there was a trade. Yeah, sorry to interrupt, because it just reminds me of the GameStop situation where, I think there was a fund called Melvin Capital that took a view, and their view may have been right on the fundamentals, but suddenly a bunch of sort of non-market players came in and took the opposite, took a long-only view, and I think it eventually destroyed that fund. So, you could be right, but somehow the market doesn't recognize it, I guess.
Well, it's a short seller's bag holder phrase in my eyes. We were right but wrong on timing, but that's the same with anything. And it's not easy. We try and avoid those scenarios. And one in Japan that was it was completely misrepresenting the viability. It went up. Luckily, we were towards the top end, so it squeezed us about 20%. It's now trading down 90-odd%. It's not easy, and that was heavily promoted. So similar to GameStop, there were hundreds of thousands of posts on a smaller scale. But it's taught us a lot about risk, a hell of a lot about risk.
Now, we alluded to this before. I wanted to talk about the pressures you're under, maybe with the regulators, because I think I noticed that a lot of financial regulators around the world, particularly in Europe, seem to just don't like short selling, and there are times where they just say short selling isn't allowed. Have you come across a situation where you've been under pressure from regulators? And do you see that happening still? Yeah. Well, I think I know what I'm talking about, but perhaps you can explain the situations you've been under.
I think we've had, from memory, I think we've had 3 investigations formal investigations. One that ended well for us, but they still wanted to try and enforce their view on us, which was in South Africa, where we got it thrown out. And that was on Capitec, where it just beggars belief. But it was quite clear that the tail of a company was wagging the regulators, and they were controlling the show. Yeah, if it was completely wrong what we said, it should be down to a company to prove it's wrong in a court of law, rather than have various shady individuals and directors tried to publicly coerce regulatory involvement, and it worked. And then it got thrown out, so it didn't work. We got investigated on Wirecard, where they banned short selling for a while. And the regulators, like investors, can almost fall in love with their own regulatory environment and perceive themselves as doing the right thing. Gotham Research, there is Dan Hugh and Cyrus the Vet. They seem to be having a regulatory issue in Spain at the moment, where and I'm just on the outside looking in. I know nothing internal to that, but it looks as though the company has been pressuring and trying to get the regulator to take a stance, irrespective of logic. And then they brought an action alongside that investigation to justify why they're innocent. And when just from a casual observer with a good interest, that was almost identical to Wirecard, where they banned it, and all the short sellers are in conspiracy, and we're a cabal of nasty, evil short sellers that just want to bring down the share price, not the fact that it was a brazen and rampant fraud that a 6-year-old could see. And they go down roads. We were investigated by the SEC on Capitec, and it was only shortly after that they realised logic, and they aren't so captive in my eyes. And we deal with shall we say, enforcement more now from a query about where did we find this information? Could you help provide us this information? We're more of a resource now, not to jinx or jeopardize us. It's quite a turn of events. And Germany, if I'm being honest, on the face of it, have actually turned the boat around to a good degree after Wirecard. Maybe some in panic. But other regulators, I know that in Hong Kong, Andrew Leff had an issue with, I think it was Evergrande, and he ended up being fined, yet he was right. And it just smacks that a viewpoint, because of how well connected a CEO is punished, versus if you write a long piece on the sell side, a buy recommendation, where even though you've ignored all the risks and done everything, you aren't held to the same task. But allegedly, you aren't harming anyone, even the people that published prior to our Steinhoff report, where it was a buy in upwards of 40-odd%. Not one analyst has been investigated or prosecuted over completely misleading or false representation in their reports on Wirecard. Why the hell not?
Well, it seems to me that you personally and anyone in this industry has to have a hide of the rhinoceros, in a sense that you're performing the kind of the emperor's new clothes person who actually says the emperor has no new clothes. And that's often a very difficult position to be in because everyone suddenly turns on you. And I noticed I was doing some research. There's a Carson Block, who I think you will know, he's sort of short seller at Muddy Waters. He often says that, regulators sort of under police in the sense, that often they don't spot the things that are going wrong, and they don't sort of they don't meaningfully punish often some of the people doing the wrong things, but they do, have a go at the messengers. So it's a tough business you're in, and I admire you for, really do admire you for doing it. It's a very important function. Do you think there's a future in this?
There's definitely a future. It's essential. I think there will be some fine tuning on how things are done.
Yes.
But the reality is that thanks to social media, if you want to call it that, they seem to have embraced the importance more than the media per se, who they prefer to go with conspiracy. The amount of times we are asked about such and such, and it feels as though there's a negative slant rather than the viability of their information. Now, I don't read all short reports. You haven't got time. But the on the activism side, you can see really good reports. And like with any work, there's good and bad, and that includes with ourselves. Just because we believe it doesn't mean the market will listen. And that's what I mean by bad. But the tide is one where companies wish to point at you profiting from the share price going down, and there's some very pathetic arguments rather than answer the questions that we pose. And companies could clear it up with transparency, yet they refuse but point at disclaimers, whereas in reality they'll answer any question as long as it's positive, and no one likes the bad news, even on themselves. But if you deal with it, you can move on.
Yes.
And the corporate, shall we say, polishing has got to a level now where, is there a future? Yes, but along the way, a few bad actors are going to have to be made examples of to stop the kind of dirty dealings that have been going on to feign innocence and intimidate critics.
How have you experienced that, Fraser? I mean, how does the intimidation work?
Wow, so one that we've discussed was where we were notified by one journalist that we were being illegally, unlawfully surveilled. And then it transpired that they were behind the false flagging of Viceroy and myself for being a not infrequent traveller to Russia.
Yes, yes. Yeah.
They'd managed to stage such a false flag that you had Liam Burns standing up in Parliament stating completely false materials or views, which he's protected under privilege. But as later investigations found, he was part of in my view, a unlawful regime to attempt to discredit us for exposing serious fraud and corruption.
I must say, obviously, none of this has got into a sort of legal case, so that's an allegation, and it's yet to be proved. So I'm sure Liam will have his own view on that.
No, he's denied. Without a doubt, if we caveat that he's denied certain elements, but I wouldn't say now that the truth is out in terms of what we know. He should have, in my view, should have retracted it. So everyone involved in that is obviously no comment, or they are denying any involvement at this stage.
Understood.
Yeah.
So what do you think the future is for you? Because one of the things I noticed is that you use social media a lot, and actually in a kind of quite humorous way, and lots of memes, and you're not like a traditional, financial, investment fund or something. And I find it really interesting that you're sort of straddling the world of, capital markets and bonds, and but also doing quite humorous things to further your case. But what is the future? More of that kind of stuff, more use of AI. What are you thinking of your new, the brave new world?
I think similar but more targeted is that we're going to be doing larger projects rather than many projects, even though we haven't done many in comparison to others. We're going to be more focused, but you won't take the humor out of me. It's ingrained. I think most short sellers, whatever their view, have a more, shall we say, open view on how things are, and it's essential. Humor, particularly in in anything, is really good as long as it's not with malice. And
yes,
you can't avoid laughing at some of the comments that have been made by various fraudulent CEOs. And sometimes humor gets it across best, I would say.
yes, yeah. No, it does. I mean, it's such a sort of interesting world. And I guess my final question, because we're coming to an end. So, what are you more motivated by, money or by the cause of what you're doing, or a bit of both?
The money helps, but it's now at a stage where we're motivated, I think, to prove ourselves wrong, which is a bad foundation to go from. But I'll explain the logic. Sometimes when we see companies, we don't actually believe how bad it is, and we carry on researching, and it just ends up worse. It's my I would say addiction to investigation that propels me now. And you could call it at times an unhealthy one where you've worked too much, and I think you can. And I'm a bit wiser than I was when I started, so I try and balance it. But in reality, it's more about, until regulators start making people accountable, and until companies are accountable, I think there's always going to be a purpose for anyone who is in the active campaigns, whether long or short, because I think the market for, and I'm speaking generally, not everyone, there's some very good analysts on the long side, and I think people have got lazy in just doubting it. If it is too good to be true, there's a reason why that phrase has stuck around. It often is. And and the snake oil salesmen are getting more polished within the capital markets. There's two cases that I can't mention publicly that we're very much involved with, where we hope the enforcement of them makes the other companies pay attention to actually stand up and be accountable. And fudging the numbers, you could argue that that's what GAP's for, or how they assess their intangibles or goodwill, or you can, it's your viewpoint. But when you're committing brazen fraud, there will always be a role for those that expose it.
Okay, Fraser, we've come to an end now, and that's a great way to finish. I think it's been a really interesting insight into your world. Good luck with any future campaigns.
Thank you. Appreciate it.
Thank you.
You've been tuning in to the Turnaround podcast with your host, Stephen Phillips. You can find this show on all the major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, Spotify, and on our website, freilibertas.com. Thank you for your positive reviews, comments, questions, and for sharing this show with others.